Crazy markets, but this video isn't about crazy markets, but I think we've got to touch on it. I'm David Jones, and this is the latest video where I'm talking to my old colleague Will Hardy, talking about leverage and how important it is when it comes to the mechanics of trading. But I thought before we get into that, let's have a quick word about what's going on in markets at the moment. I mean, this sell-off has been brutal. You know, it was only, it's about 3 weeks ago. We saw the S&P 500 US index hit a fresh all-time high. And since then, it's pretty much waterfalled all the way down. I think what's quite interesting is, I'll flash it up on the screen now. If you look at a daily chart of the S&P 500, with the 24-hour trading stripped out, you can see that since the all-time high on the 19th of Feb, we've only had 3 up days on the daily chart, and they haven't really threatened the highs of the day before. So it really has been, I think, a particularly brutal sell-off. You know, I've got to hold my hands up and say I didn't see it coming. You know, a market that's making all-time highs is bullish, and then bang, we've really turned around. Interesting to see where it all calms down. I'm not trading much at the moment. I've got some trades on, but I'm quite happy to let the dust settle and see what happens next. I'll be back for the next live stream on, I think, Friday the 21st, a week this Friday. I'm away this weekend, so I won't be around for it this week. But let's see where things are then and see if things have calmed down. Which brings me to today's topic. And I think it is quite a prescient one, given what's going on in markets. I think, you know, plenty of people will be the wrong side of this move, trying to catch the falling knife. And when you're doing it with leveraged products, such as spread betting, if you're in the UK, contracts for difference, foreign exchange, futures, you can be in a lot of pain fairly quickly and end up getting closed out of your position by the broker because your account is getting dangerously close to using up that margin and a bit more. So in this video, me and Will talk about a sensible approach to leverage. How does it work again? We'll look at the example with the FTSE trade. We'll talk about how much we would rather have in our account over and above that initial margin requirement. And really, the initial margin requirement, that shouldn't be governing what you have in your account. Enough chat, let's get into it. So we're looking at that FTSE trade. If I just bring it back up on the screen. So we have that position. I've done £1 a point at 87.77, whatever it was. I've tied up £438. So I've got nearly a £9,000 position on the FTSE. All I've needed to do to open that is £438. This sounds great. You know, I've got a load of leverage going on here. Is that all I need in my account to do that trade? Talk me through the mechanics of this, because this sounds brilliant. I can build up these big positions and only put a relatively small amount in. I just sit back and see if they work out. How does it work in reality?
You know, now, of course, you know, whenever we do a trade and we're either going to go long or short of a market, it's because, you know, we've done our homework and this is our view. We think the price is obviously going to go in a certain direction, and that's why we open up the trade in the first place. What we also, you know, have to think about, though, of course, is downside, and essentially, you know, we want to make money out of every trade that we open, but, you know, we've talked before about, you know, prudent risk management. We may want to use stop losses. We are advocates of stop losses. You know, that's always what we advise. Where might we put that stop loss? You know, it could be actually that when we're looking at opening up the trade, you know, for whatever reason, our exit level is 10% away from where we're opening up the position. So if we think back, you know, actually the initial margin requirement to open up the trade was only 5%. But actually, you know, our risk that we want to allocate to this position is greater than that amount. So
so let's talk about numbers there, because that's interesting.
Yeah.
So I'm a buyer. I'm buying at 8,777. My margin requirement on the FTSE is 5% of the total exposure. So I'm putting £438 up. But what I'm saying is, I'm quite happy to sit with that until it goes 10% against me. So if we round that up, if that goes 900 points against me, I'm going to come out of the trade. But that £400 initial margin, £438, isn't going to cover that, is it? So what do I need to be thinking of?
Well, it's not. And actually, you know, there's a couple of reasons for that. So first and foremost, you know, now in the UK, the way that brokers operate is is based on cleared funds. So accounts are run on cleared funds basis.
Yeah.
And there's a couple of features of the accounts which we also need to be aware of. So first and foremost, as you say, that when you open up one position, theoretically, you only need to have the amount in your account to cover the initial margin.
Yeah.
Now, in our experience, that's not really the way to approach a trade.
No.
Normally what we would expect to see when, one of our clients is opening an account is that actually the way that they will operate is by thinking, right, I've got a certain amount of risk capital which I want to allocate to my account.
Yeah.
And then I'm going to essentially, look at how I'm going to manage individual trades based on that initial deposit. So, for example, we're talking about here doing a pound a point on the FTSE where the initial deposit requirement is about £450. But actually, when we're thinking about, just prudent, account management and risk management, we'd also probably be thinking about, something along the lines of saying, well, if you're going to start trading, you don't want to actually tie up any more than, say, 10% of your account on an individual trade.
Yeah.
So actually, when you're doing that trade, and of course, it's down to individual preference, but, it might be wise to look at it on the basis to sort of say, right, if you've got actually a 5K account, your account is going to allow you to, actually trade a pound a point on the FTSE, maybe even £2 per point, which will fit, comfortably within your sort of risk reward parameters.
So a quick commercial break. In a second, I'm going to show you the account that I use for the YouTube live streams. It's a real account with real money, my money, and we'll show how the initial margin works in that account and why I would want more. The broker I use for those trades and for my trading over the last couple of years, I've got no hesitation in recommending. Like I say, I've been with them for a couple of years. They're good for a few points. First of all, you can trade small. I think that's important if you're either starting trading from new, you don't want to be taking on massive levels of risk. If, like me, you try out a few different trading methodologies and you trade a few different markets, it's also good to have that flexibility of small size. Plus, of course, again, pretty relevant at the moment, in volatile markets like this, where we're seeing much bigger ranges, you want to be able to scale back your size accordingly to keep the risk at a sensible amount. You don't want to be trading too big and over trading. And then finally, you can link the broker all into TradingView, the charts I use. I'm a big fan of that, so you can see your open positions, stops, all of that on the charts. To give them a try, go to the link down below, bit.ly/DavidTrade. Try them out, see what you think. Drop me an email and let me know. My email address is dj@davidjonestrading.co.uk. Always interested to hear feedback. Like I say, I've been with them for a couple of years. Great support, nice, easy to use platform, and I do it all through TradingView, so give them a try. Right, now we're going to have a look at some real trades, talk about margin and leverage a little bit more. And you need to think about it. I'm going to flash that account up now because there's a few trades on there where you can't see this, but I'll talk through them. You need to think about it as a buffer zone, effectively, for your trade. If I'm doing the FTSE trade and I've got £438 margin and I've only got £450 in my account, like you say, if the market does start moving against me, the risk is the broker's going to close me out. Look at the trades I've got running at the moment on this account. I think these are done in the various live streams that we've done. So there's a mix of trades in there. But let's take this one, the sterling yen trade. So I put the sterling yen trade on. It's been up, it's been down. It's down around £12 at the moment, that trade. It was a small trade. It did £0.2 a point. You can see here, estimated margin is £127. The value of that position is 3,822. If I want to keep that trade running, I think the risk on this trade was about 100 quid. I need to have more than that initial margin in my account. So don't think about your initial margin as just your only commitment. As well as I think, quite eloquently explained there, we need to have more money than that in the account and have it as a buffer, and also have it so you're not getting stressed out by every wiggle that's going on in the market. I think one of the things, again, that people will often complain about is they feel they've been unfairly closed out of a position by the broker. But, if you have enough money in your account to cover any running losses, the broker is not going to close you out for your own good. That money is there to be a buffer against the existing position. So don't sail so close to the wind that a small movement in the market for your trade means you're going to get taken out. If that's happening to you regularly, I think again you need to recognize that you're probably trading far too big for the size of your account. And perhaps it's less of a temptation these days, Will, but I still think it's a risk, isn't it, with leverage, to get the pound signs in the eyes and think, oh, I can magnify my money up here and make a fortune. That's it for this video. I hope you found it useful. Like I say, crazy markets at the moment. I'm quite happy to let the dust settle and see if things calm down. And things will calm down, because they always do. We do go through these periods now and again that can be pretty brutal if you're the wrong way around to the trend. We'll take a look at it all again in the live stream. To try out that broker, click on the link down below. It's in the description. If you're new to the channel, I hope you find it useful. If you could subscribe and like and all that YouTube stuff, that'd be great to continue to grow the channel. But until the next time, good luck with your trading.